Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 25th day of March, 2015, and this is the daily report for gold and silver. With a stock market absolutely under dramatic pressure today, Dow Jones almost off by 300 points. We do have the precious metals across the board trading higher this morning. First to gold, 1195.72. That's about mid-range. We've had a low of 86.90 and a high just under 1200 at 1199.50. That high is important. We'll touch on that in a second. Silver also in the green, but ever so slightly, just like yesterday was ever so slightly to the downside, up about 2 cents, just under $17. We're currently looking at 16.97 silver. The high today has made it over 17.11. The low 16.85. We'll touch on silver in a little bit. So traders, first, let's touch upon gold. We're looking at gold. Gold is trading about $2.50 higher, as I said, $11.95 and change. When we take a closer look, though, at the dollar, it is, at gold, it is all, again, about the dollar, in this case, dollar weakness continuing. A weakness is added about $3.60. Normal trading is actually a negative dollar, quiet day in the market. That gives us our net $2.60 change to the upside, but that upside, again, has been all dollar weakness. And you can really see that dollar weakness. It's not a lot, but it is weaker today. That's this red candle. We are looking at a daily chart, but we're seeing something that is uniquely different from what we have seen in the past as the dollar's been rising. We've talked about this before, but we would get a surge in price or in value of the dollar index, which would be followed by somewhat of a small correction, a shallow correction. In this case, we get a rally and we go sideways for a little while, a rally and we go sideways. But what we have seen when we look at the dollar index over time is we've not gotten the kind of dramatic, almost as we called it, I believe a couple of weeks ago, a parabolic rise, and now we're getting this pretty intense fall. Of course, that was all precipitated by this one-day candle right in here, in which this was following the FOMC minutes being released, in which we saw the market under dramatic pressure. The low that it hit, and the range, I should say, that it hit was the greatest range that we've seen since 2009. That's a daily chart. Let's slow this down a little bit and look at our weekly chart. And on our weekly chart, let's make sure that all the data points are correctly in. But on this weekly chart, you can see that we have been down on the week. We're not near the lows of the week, but nonetheless, we are trading under pressure in the dollar index. Interesting day as well as week in terms of crude oil. Crude oil was up slightly. It's slowly teetering back towards 50, currently trading 48.97, so let's call that 49. This being a weekly chart. And we can see that what we have seen since this market really has had that dramatic fall out of bed, we had one attempted rally right in here. Market kind of topped off. I believe it was at around $55 per barrel, then came back down, retested this low. We could have even made a lower low on the day. But for the last couple of weeks, it's been slowly meandering back up off of those lows in the low 40s. Traders, we are looking at a weekly chart in the E-mini, Standard & Poor's 500 E-mini contract. You can see the dramatic pressure that this market has been under. There's absolutely no doubt we were off about 30 points today in the S&P. You can see it on this weekly chart. This week has been down. The only other thing that I am noticing about this market, and we talked about this a little bit last week, is we've had this dramatic ascent to higher pricing, record pricing, but it does appear as though we've been staying within this channel in terms of highs and lows, and even a move this dramatic over the last couple of days, today especially, has not really even taken it to the bottom of this channel. So in terms of technical downside, we could still be in a very, very bullish Standard & Poor's market, but be in a corrective phase as it moves up and down this channel to the tops and the bottoms. However, traders, to really get a sense for the kind of equity depletion that we saw in the Dow Jones, the equities markets as a whole, I draw your attention to this chart. It's a 720-minute, a half-a-day chart. Again, the E-mini S&P 500. And there's no doubt we can look at this session of trading, the 720 minutes, this half day, in which we saw the market at the beginning trading at about 81, now down around 54. As I said, almost a 30-point drop in the market. In terms of support levels on a technical basis, we'll want to see if the market continues to trade lower, I should say. But if 46 would hold, that would be the next logical level. And then, of course, in terms of resistance, that would be up around here. And this level is at 2060. So traders, as you know, and especially for those of you who have been with me over the years, I don't do a lot of work with the short-term studies. They tend to really have so much noise that when we're trying to pick a trend or not, it doesn't really do us any service or justice. However, in this case, I do want to point this out. We hit, and this is what I talked about, this $1,200 mark that we hit as a high resistance. We absolutely need to break through that point. But when we look at the MACD, you could see that there was a point when it attempted to cross and actually did cross. Very, very short-term study, by the way. Traders, this is a 180-minute chart. So we're only looking at a 3-hour chart. But now you can see it looks as though it's crossing back up. But we are in this upper register where we could in fact see some weakness. So we'll want to pay very, very close attention to how gold trades over the next couple of days. Which takes us back to the primary chart that we have been looking at. And that chart, of course, is our daily chart. When we look at the MACD, we do have these lines moving apart. And that is a strong signal that the trend is still fairly intact. We have seen this really be a dollar-based rally, but then we've seen dollar-based declines. In other words, we've seen gold have to be like a salmon swimming upstream. This is what it's like to witness gold swimming like a salmon downstream. It's got all of that momentum really pushing it to new grounds and higher highs. And as long as the dollar remains under pressure, we should see a gold continue to trot higher. Again, we do have some real resistance here at 1201, 1200. We've talked about that. But as we have seen before, we could see the market move sideways, form a little bit of a base here. We could even see it move down a little bit before it clips up. But I still believe that we have a real distinct opportunity to see the market move as high as 1221. Silver, a similar scenario in that we are looking at what we call those big century marks, 1200 in gold, this being $17 in silver. We do have some technical tops right in here. And as I said, my target on this particular trade, if gold has the ability to go to 1221, I'm looking for 17.5 in terms of silver, in terms of the correlation between the two prices. This has been Gary Wagner, wishing you, as always, good trading. Talk to you tomorrow on Thursday for another daily update and review. Bye-bye.